If you were to say to someone, hey, you've got this $50 token, you're getting out of the Lofty because you're kind of burnt out and you want to go try something new, I'll give you $30 for it. Someone taking the $20 loss, they'll do that pretty swiftly just to get out of something they didn't like. So I would do that as if I was to buy in here, instead of buying into a brand new property at the ask price, I would drop in a bunch of buy orders on a bunch of properties that are performing pretty well. So when I look at the pros and cons of Lofty, let's talk about some of the pros. Number one, daily income from the rent. I like that. You get appreciation from the properties. I like that. They have great due diligence on the documents. I like that. There's no lockup period, so when you buy in, you can start selling out your tokens if you want. But like I said, it's a little Hotel California there, so you might not be selling out very quickly, but there is a way to start at least liquidating your tokens if you want to. And there are rumors that they are going to be opening this up to a bigger marketplace. And I will say in general, you guys, when it comes to blockchain, look in the future for property tokens like this someday to be able to be sold in other marketplaces out there. When that happens, that will provide a massive bump in liquidity to all these properties. When you have a secondary market, you can get a 20 to 30% liquidity bump. So if they open this up to a bigger liquid market, you're going to see a bump in all these prices. That's just my prediction as a broker, but I think that would happen. Now, the risk I see is, number one, you don't know the locations. You haven't seen the properties, so there's a little bit of risk there. These don't seem like A-plus locations necessarily. Another risk is you're trusting the documents. You're trusting the due diligence that it's been done completely. Now, by looking at these documents, they look real, and I would move forward for a $50 or $100 investment myself on these. But that's just sort of what you have to understand, is that you're trying to buy a property on paper. And the last risk, this is a risk that I see more for the platform than the investors, and that's an SEC risk. Is this a security? Are they going to get slammed by the SEC? Because there's issues here about whether or not it goes through the Howey test. When you look at that, the Howey test, the 4 prongs, the hard one for Lofty is to be a it passes the first 3 to be a security. Look it up if you want to know what those are. But the 4th one, the problem one is that you're profiting off efforts of others. That makes it a security. In this case, I think what Lofty's arguing is that we're a marketplace like Airbnb. So we don't own the properties. We have nothing to do with ownership. Each individual token holder is owning the property. The token holders are voting on the governance of the property, the tenants, the repairs. Everyone votes on that. So I understand that, but does the SEC agree with that? We don't know yet. Time will tell. But the risk to the platform, I think, is what the risk is with the SEC hitting them and shutting them down. Worst case scenario. If that happens, what happens to your property? Well, it's kind of unknown. But a couple things I see when I look at their documents. Number one, the property holders, the token holders, they're part of a DAO and they decide what to do with the property. A token holder can issue a vote and all the token holders can have a governance vote to decide if they want to do something different with the property. So if the SEC was coming down hard on Lofty, the token holders, which are separate, they're a Wyoming registered DAO, those token holders could elect just to sell the property. All that stuff is on chain. There's titles, there's deeds, all that stuff has been done. So the SEC can't take those properties back. There's a huge process and they have hundreds of properties up here. I think worst case scenario is that Lofty could, if they were to get shut down by the SEC, each property, being its own DAO, could decide what to do. Liquidate the property. It could be off platform. There's already a process that there's a law firm that's associated with each DAO in case Lofty goes bankrupt or goes out of the way, that they would help handle the governance and the management of the DAO. I like the way that that's set up in case of any sort of risk of the SEC, but I just wanted to be honest with you guys that I think that's the risk here. Now, I said at the beginning, there's another platform that you can look at that does have leverage, and I love that platform, and that's going to be right here. If you click on this link right here, you're going to see my review of a platform that offers fantastic opportunities with leverage, and I really recommend you check that out.